This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
It is great to have your company here on Business Now on this Monday. Let's take you around the country and look at the weekend auction markets. Nationally, there were 1,817 auctions. That's fewer than last week, but also with a clearance rate of 61%, which I'm going to tell you is pretty much standard around where it's been in recent weeks. In Sydney, there were 638 auctions. That's more than last week. The clearance rate there just under 60%. So again, pretty much steady. In Melbourne, 707 auctions, down on last week. A clearance rate of 66%, a little higher than last week. In Brisbane, 85 auctions, more than last week. The clearance rate, 61%. That's also higher. In Adelaide, get this one, 65 auctions. It's the hottest place in Australia for property right now. 81% of those were sold. Finally, in Canberra, 46 auctions and 63% of those were sold. So let's bring in here Paul Ryan, Senior Economist with REA Group, who joins me now. I've got to tell you, those numbers kind of look vastly different, you know, depending on which interstate city you're in, which capitals there, all of that stuff depends very much on the local areas right now.
Yeah, I mean, auction clearance rates of around 60% are pretty solid and consistent with continued price growth across the country. But yeah, we're seeing Adelaide and Perth continue to be very, very strong. Sydney quite strong. Melbourne a bit less strong, but still much stronger than we saw earlier in the year.
So just think about this. The past year, 500,000 new migrants, net new migrants have come into this country. And that all contributes to where the housing markets are, where the rental markets are, where the appetite for investors and builders sits right now. Another 500,000 are likely to come in this financial year. So again, that's where the core demand for the housing market is actually coming from.
Yeah, I mean, we're seeing increased housing demand feed through into prices, into rents, into everything except new housing construction. That's the big laggard, and that's really what we need to balance that supply and demand situation in the housing market.
Okay, but then go to rents, because rents clearly are the key in terms of one of the keys in terms of inflation. And as we've talked about earlier, it's all feeding into decisions that are going to be made by the Reserve Bank. So the problem is, unless you can get more homes built quickly, which is problematic because you don't have the builders or the materials to do it, then you really don't have the supply to actually ease off that inflationary pressure.
Yeah, we kind of know that rent inflation, which is one of the biggest components of inflation, is going to continue to be strong. We've got the new inflation read coming out this week. The RBA are watching that very, very closely. But we know that advertised rents, new rents that are feeding into the system have been very high. That's going to mean rent inflation is going to stay high for several quarters now.
Okay, so last year, going into sort of the beginning of this calendar year, there were very big rental increases. Melbourne, Sydney, Brisbane to a certain extent, Adelaide certainly as well. Is there any sign that those rental increases are going to come off when people's leases come up for review towards the end of this year?
It's still going to be really, really tough for renters out there. Now, we've seen pressure on rental growth fall, but pressure is still very, very strong. We're seeing advertised rent growth above 10% over the past 12 months. Now, the bad news is that there's still very few available rentals. We've got rental vacancy rates of just above 1% nationally. That's kind of emergency levels, really. There's just not enough rental properties.
Okay, so that being the case, does that actually tip the balance for some of those people who are right now renting to say, oh, forget this, I'll go and try and seek to buy? If they've got the deposit, and I know that's often the problem or the struggle for them, does the mathematics start to actually then go, actually, it's better off financially paying off a mortgage?
Absolutely. For first-home buyers, and the other group is for investors. And we're seeing investors make up a bigger portion of the market as rents have increased very quickly. Of course, higher interest rates are hurting both of those groups of buyers at the moment as well.
Which is the reason why many of those investors will be scouring the regions. Now, it's not necessarily going to the regions where you might want to live. It's actually going to places that might be outside that give you the better rental yield.
Yeah, absolutely. So we're talking suburban areas, very peripheral parts of cities where rental yields can be strong and can make the numbers stack up with interest rates of, 5, 6, 7% for investors.
Which means that you're almost neutrally geared even before you even start that. The question then is what your capital growth does.
Absolutely. And that's been the play for Australian property for several years now, is capital gain has been the big winner. Where does that go in the future? That's the big question.
I'll tell you what, Paul, always good to have in the program. Many thanks for your time today.
Thank you very much.
There you go.